folks, Dan Frio here, the Mortgage Update. Today is, oh man, I got a message. July 21st, 2020. So what I want to get at today is there's a lot of information out there by a whole variety of people talking about forbearance. And it's funny because it's coming from people that have I won't say skin in the game, and I know they mean well. But the biggest effect that people kind of see in this is, what's it doing to my credit? What's really happening behind the scenes? And, you get nothing for free. And here's what I mean by that. If somebody comes to me and says, hey, Dan, you just get 4 mortgage payments, I'd be like, dude, I'm in. Count me in. I can use 4 missed payments. I got a daughter in college. I got other bills. It'd be awesome not to have to make a mortgage payment in 3, 4, 6 months. But then I think about it, and I'm like, well, obviously the bank's not just going to give me the money. So how do I get caught up? It's like if you say, I'm not going to pay my car payment for the next 2 months, it doesn't just go away. You still have that car payment. Well, there's multiple things that could happen if you go into the forbearance. And there's a couple that, are predominant when it comes to this. One is the first one, and the norm, or what happens the most, is this. They say, well, you can skip 3, I won't say skip, I want to rephrase that word. You can postpone, I'll put it that way, 3, maybe 6 mortgage payments. But then what? Well, then on that following month, you have to get yourself caught up. So look at it this way. I miss July, August, September. I come October, I have to make July, August, September, October mortgage payments. I have to make 4 mortgage payments. I can't. If I couldn't make this, how am I going to make 4 after 4 months? So that's the most predominant one that happens. The next one is they'll say, okay, you skipped 6 payments. We're going to add up all those divided by 12 and add that to your current mortgage payment. So within the next 12 months, you get caught up. That's the next one. Then the final one, which is maybe not so bad, is they're going to throw it all the way to the end of your mortgage. So after 30 years you pay, you're going to have this deficiency balance remaining. Okay? Those are the 3 options that you have. So what I want to try to do is, for those that are like, you know what, I want to refinance, or I'm looking to buy a house, or I'm looking to refinance and pull out some money and pay off my bills and so forth. How does a forbearance affect you guys? And that's what we're going to talk about. So let's get on to it. Here's the rulings that just came out. And this is actually from HUD on how things will be treated. Okay, so let's go through what the real rules behind everything. This is actually published. You can find this on all the websites, but I want to condense it for you. So if you're looking for a conventional loan, okay, so it's good by conventional guides for mortgage loans and forbearance, okay? For borrowers in forbearance and not yet in some kind of modification. There is a difference between the forbearance and then the modification. You can go into forbearance and say, you know what, can I postpone 3 payments and then I'll catch it up. Okay, yeah. And the lender might say, yep. Or they may come back and say, yeah, no, we're not going to do that. We're going to change some things on you. And I would highly suggest you don't do that. Because in the past, what happened to a lot of people is they went into a modification plan, and the lenders would increase the rate, take the balance that you still owed, put it to the end of the loan, and then they're like, we'll help you out. How about if we were able to reduce your monthly payment by $100? And you're like, perfect. Okay, let's modify your loan. You're at 4 now. We're going to take you to 6. Don't worry about it, because your payment's going to go down. People are like, oh, okay, cool, whatever. Sign it. Well, you didn't realize that if your rate goes up, the payment has to go up because you're paying more interest. But how they did it is they extended the term for, in almost all cases, 40 years, and also put the deficiency balance at the end. So after 40 years, you still owe money. Please don't do that. I mean, you're just paying interest on interest on interest on interest on interest. You know, I mean, if it came to you losing the house versus that, I mean, do what you got to do. But I would highly suggest you don't do that. So let's dig in the guidelines a little bit further. So there's if you're just in the forbearance part, or if you modified your loan. So basically, in a nutshell, what this is saying is if you just delayed your payments or postponed it, you can refinance or get a mortgage. You just have to get the loan paid current before you close. Okay, that's it in a nutshell. If you go into the modification plan, this is where it gets a little bit weird. On conventional loan, you have to finish that duration, and then you have to make 3 monthly payments for 3 consecutive months on time before you can do anything. That's the conventional guidelines. Now, the guidelines are pretty much similar with FHA, but in VA is where things get a little bit different. If you go into a modification plan, you then have to be in that agreement. You have to make 12 consecutive monthly payments before you can refinance your VA loan. So that's the area where people, you might not care. And that's fine. But what I'm trying to do is explain to people out there, if you're looking to sell your house and get another home, and you're like, well, I can make the payments. I just been putting the money to the side. You're going to have to make those payments current before you actually sell your house and or get the new loan. Be careful if you get into a modification. Be very careful if you're in a modification and you're trying to get a VA loan, because there's a lot of moving parts to that. So that's basically the guidelines, the true guidelines published just the other day on how forbearances work. What I would highly suggest you do is if you're looking to refinance and or buy a house, get pre-approved to get a new home, anything of that sort, and you're contemplating or you're in a forbearance, please call me, and so we can discuss all the options that you have. So I won't go in any further. This thing can change every day if possible. The government keeps jumping in and making some guideline changes to it. So I'd highly suggest you keep up to date on this, but it's what I do for a living, and I'd love to help you. So if you want to reach me personally, you can give me a call at 844-775-LOAN. That's 844-775-5626. Or go to therateupdate.com. Feel free to get any resources here that you want. If you need a rate quote, go here. If you're looking to get the ball rolling on a refinance or get pre-approved, click the Apply Now button. If it's during office hours, I'll get back with you within the hour. Kind of pick your brain a little bit on what you're looking to do or not do, and kind of take it from there. So I want to thank everybody for watching. It's a new format. I'm posting twice a day, rate update, and then guidelines and program updates, down payment assistance, things that can help people that own homes or are looking to own a home. And I'm also putting everything on iTunes, Spotify, and all those other places. So spread the word around. I'd greatly appreciate it. So if I can be of any help, let me know. But please give me a thumbs up. I greatly appreciate it. Subscribe down below. Leave some comments if you would. Share anything you can do to help out. I just hit 9,000 subscribers. I'd like to hit 10,000 by the end of August. We should be able to do that with your help. So thank you again, and I will see you tomorrow, same time, same place. Bye-bye.